Hello and welcome to Crypto Weeklies. Today let's analyze Bitcoin, its machine learning based forecast and regression based analysis as well as accumulation strategies. None of the content is financial advice. We'll briefly start with the uh, Bitcoin current price action at around 58,000. We'll look at what has happened over the last 7 days, growth at around 3.5%, around 59k, the market cap at around 1.16 trillion, circulating supply about 19.8 million out of 21 million, volume at around 30 billion. Now let's check at the machine learning based forecast. Our model trained on weekly price action starting September 2014. Now if we were to look at what were the potential bull case, base case and bear case, the week which will end on August 18, the average price for this week has been at around 59k. Per our AI model, the base case scenario forecasted till about end of 2024, early 2025 is between 60k all the way to about 68k. This is the base case. That means without any bias to bullish or bearish side. This is the likely growth of Bitcoin over the next 6 months. The bear case is between 46k to 57k. So if there is a further crash in the market, that's where decent support at about 70% confidence level can be achieved per our machine learning model. In terms of the bull case, at 68% confidence level is between at 64k BTC to about 96k. And if you are interested in week by week analysis of these base case, bull case and bear case, we have a tabular format. All of these charts are available on cryptoweeklies.com. The link is on the bottom of your screen. The base case at around for this week at around 60,400. You can see this week by week changes to the base case per our machine learning model. So the relationship between time and price is kind of as Bitcoin gets more and more adopted, the price and the base case becomes higher with time. The bull case again becomes more and more stronger. The bear case becomes slightly weaker with time, as to account for any bearish sentiment in the future. So this is these three columns: the base case, the bear case at 68% confidence, and bull case at 68% confidence, are what we show pictorially. If you believe that crypto can have a mania phase, which personally speaking that usually have witnessed in the post halving year, that would be in sometime in 2025. If let's say that post halving year mania is occurs in 2024, later part of 2024, slightly earlier than 2025, then the 2 standard deviation bull case for BTC per this model is between 63k and 133k. So again, this is one way to analyze. And if on the other hand is if you believe that there is further room for BTC to fall due to any macroeconomic data, then the 2 standard deviation bottom is right now between 32k and 53k, till extended till about middle of January 2025. So now that we have covered the machine learning based forecast, we'll briefly look at the number of bitcoins needed to be a Bitcoin millionaire at different point in time. This is the retirement compound annualized growth rate model, considering Bitcoin grows at around 22%, which would be half of what Bitcoin achieved over the last 15 years. Bitcoin grew in the last 15 years by 46%. So as the asset has matured, instead of looking at the existing compound annual growth rate, dividing it by 2 makes more sense. As and this is again the idea with this analysis is to tune out the major bearish and bullish phases and essentially draw a 22% compound annual growth straight line to the current price of BTC, and look at if and how the exponential returns are possible with Bitcoin. So with 22% growth with the current prices at different point in time, let's say at 2032, which is about 8 years from now, price of BTC could be at around 250k, at around 250k. In 2036 at around 550k, in 2038 or 39 at around 1 million BTC, and in 2040 at around 1.12 million. So if the price of BTC goes to 1.12 million, the number of bitcoins needed would be a fraction, that is at around 0.82 bitcoins to be a Bitcoin millionaire. Again, this assumes that Bitcoin grows at half of the pace that it grew over the last 15 years. Sorry. In terms of the regression analysis, the key idea with the polynomial regression analysis is Bitcoin and how the fair value of Bitcoin is. That is the current price is at around 59k. The fair value per hour model is at around 66k. If we will just zoom in to look at what are some of the valuations of interest, the 66k is the fair value, 109k is the 1 standard deviation bull or 1 standard deviation overvaluation at this point, and 40k is 1 standard deviation undervaluation. So that's where most likely the Bitcoin's price could fluctuate between 40k and 109k at this point in time. Again, this range is kind of a wide range. That the reason for this is because Bitcoin has had significant rallies to the upside as well as to the downside across multiple years. So one key thing to notice is that the 2 standard deviation peak which Bitcoin achieved sometime in 2021, you can see the price came really close to the 2 standard deviation peak. At that time, the 2 standard deviation peak was at around 67k. Now the 2 standard deviation peak is at around 175k. So if Bitcoin were to top today, the 2 standard deviation peak is at around 179 between 175 and 179k. Again, these lines are growing with time. At least they have not flattened with time. That means if the peak were to occur in 2025, you can assume that the lowest valuation at 2 standard deviation peak would be at around 175k, looking at today's data. So if you are interested into looking at the topping signal related to crypto and especially Bitcoin, you can subscribe to the channel. Also give this video a like to stay updated. Last and not the least, we'll analyze what are some of the accumulation related values at this point in time, the risk associated with Bitcoin accumulation. Per our SMA or simple moving average model, the risk associated at this time is fairly low at around 0.26, kind of the third best time to accumulate Bitcoin per this analysis. You can see over here, and not too long ago, the risk associated with BTC accumulation was at half of that, at around 0.14. That was when the price was at around 53k. Now the price has recovered slightly, 5,000 more than the 53k price in the earlier part of August. The second model that we would like to discuss is the DCA model, per which the price of or the risk level associated with Bitcoin at this point in time are at between, we can zoom in a little, at around at least during 5th of August, when the price was at around 50,000, the risk were at around 0.3. So again, per this analysis, between third and fourth best time to dollar cost average, definitely. And if you when the last analysis is the time weighted average price analysis. Again, the key idea with this is you can check the colors and how they have a relationship with this time weighted average price, which is the blue line over here. During the bear market, price comes really close to the time weighted average price. You can see in November 2022, when the time weighted average price was around 13k, price was at slightly above 15.5k. The color code were shades of blue, which denote undervaluation or significant drop in the price vis-a-vis the bull market, where the peaks occur, the time at that time the color codes are red, and the difference between the time weighted average price and the BTC price is significantly higher. Right now you can see the price is, or the time weighted average price, the relationship between the price and the time weighted average price is at around the yellow or neutral risk level. And if you were to look at the risk individually speaking, and if you were to just close out the other two analysis, right now the risk associated with BTC accumulation per the time weighted average price model is at around 0.75. At one point in bear market, the risk levels were at around 0.2, and that arguably was the best time to dollar cost average Bitcoin per this time weighted average price analysis. Definitely this is one metric to watch during the bear market to accumulate Bitcoin at extremely undervalued prices. Nonetheless, now that we are closer to the top, you can see over here during March of 2021, the risk level with Bitcoin accumulation at that point per this analysis was at around 0.96. Now that we are at 0.75, we are not as overheated as we were back in December 2017 or February 2021, but definitely one thing to look for one analysis to look for is when this particular time weighted average price risk goes back to this between 0.9 and 1. So again, if you were to we are interested to look at this analytics, and if that flag were to hit, please subscribe to the channel and also give this video a like to stay updated. With this, I would like to conclude the video. Hope you enjoyed the content and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.